Sumit Sarkar has done the math to tell us just how much TCS saved the Tata Group, the blues, in 2018. Sumit, good morning. Happy New Year. Not that this is unknown, but this year it was very stark.
Well, good morning and a Happy New Year. So if you see, this is the first time that the Tata Group companies are closing the year with a market capitalization of more than 10 lakh crores. But very few companies have aided the Tata Group to achieve this milestone. So in 2018, only 28 listed Tata Group companies have managed to gain, which is the lowest at least since 2011. Now, out of these 8 companies, one is TCS, and if you remove the gains in market value of TCS, then the other 27 companies have seen a fall in their combined market value. Now, TCS market cap increased by nearly 1,94,000 crore rupees in 2018, but the market capitalization of the other 28 listed companies declined by nearly 1,12,000 crore rupees in 2018. Now, this disparity in the market value of TCS and other 27 listed Tata Group entities has increased to such an extent that now TCS market capitalization is more than 2 times the combined market capitalization of all the other Tata Group companies, and this is for the first time at least since 2004 that we are seeing this kind of an event. Now, this shows you the kind of dependence that Tata Group now has on TCS. Now, in 2018, if you see, TCS market capitalization was close to 7,11,000 crore rupees, while that of the other 27 listed Tata Group companies was only close to 3,35,000 crore rupees. Now, among the top gainers for Tata Group, we have TCS, which saw an increase in its market capitalization of around 1,94,000 crore rupees, followed by Titan, which managed to increase its market capitalization by only 5,700 crore rupees. And then comes Indian Hotels, whose market cap increased by close to 2,800 crore rupees. And on the loser side, Tata Motors, which saw a massive drop of around 83,000 crore rupees in its market capitalization, followed by Tata Steel and Tata Global Beverages.
So what are the factors that influenced the major names in this group?
So for TCS, it was a higher growth rate, rising share of digital business, margin expansion, and 6 different corporate actions that to reward shareholders aided the rally in the share prices. Now, company's revenue grew at a higher rate compared to its nearest peer, that is Infosys. This, coupled with rupee depreciation, aided the company's EBIT margins in 2018. Now, the revenue growth was partially aided by rising share of digital segment to the overall revenue mix in 2018. Lastly, the corporate actions. In 2018, if you see, TCS announced 4 dividends worth 44 rupees per share, a buyback and a bonus issue, all to reward shareholders, and this also supported the rally in the share prices of TCS in 2018. Now, for Titan, if you see, the start of 2018 was not that good for the company because of volatile gold prices and because of a possible import duty hike, but it picked up pace as import duty was not hiked. Jewelry sales volume and watch sales volume picked up in the second quarter of financial year 2019, and more importantly, the management commentary regarding the Q3 outlook was very positive that the company gave post the second quarter earnings. Now, for Indian Hotels, it was favorable demand supply dynamics, pricing power, and operating leverage that aided the rally in the share prices of Indian Hotels. Now, demand for Indian Hotels hotel rooms increased by nearly 4 to 6% as against a supply of around 3%. Now, this gave the company the pricing power, which boosted its operating margins in 2018. Now, on the loser side, if you see, Tata Motors, headwinds faced by JLR, which resulted in double ratings downgrade in 2018, worked against the company. Sales volume of JLR slowed down and in fact declined in the first and the second quarter of financial year 2019. The company also reported 2 consecutive years of losses, which prompted S&P to cut its rating twice in 2018. Now, post the Q2, the company did give a turnaround plan for JLR, but another rating agency, that is Fitch, said that this turnaround plan won't be enough to lift the rating pressure that the company has seen. Now, for Tata Steel, despite a rights issue which increased the number of shares, the company's market capitalization fell in 2018. Now, what led to this? A double whammy of falling steel prices and rising raw material prices, coupled with trade wars, marred investor confidence. Along with that, an expected delay in completion of its joint venture between the Tata Steel Europe and Thyssen Group, and higher debt to acquire Bhushan Steel also worked against the company in 2018. Lastly, Tata Global Beverages. Now, poor tea and coffee plantation in 2018 and a weak domestic and international tea business weighed on the company in 2018. Lower crops in the plantation business resulted into higher tea prices in 2018. This, coupled with competition, weighed on the domestic tea business of the company, while the international tea business was impacted due to declining black tea market and an extended summer in the international market, which impacted the international tea business of the company.